BNB welcomes you back to this video and says hi to all the new watchers because I am giving out a new proposal to everyone. Because I'm a small channel, I would like you guys to propose me new stocks, new cryptos, or new DeFi platforms, which would be beneficial for you because you'll get a new perspective on your investment. And for me, it's going to be beneficial because I would be able to target an audience that's looking for that particular investment. So if you are interested, many others would be, obviously, and that would make a good video for me. I'm no Warren Buffett, but I have been investing for 6 years. Also, I've taken 2 years of financial classes, in which I've learned business growth, investing, from its fundamentals to the complexities. Now, obviously, I'm no Warren Buffett at predicting the futures, but I'm better than most common human being at predicting the futures in financial market. Obviously, nowhere else, not in the love market. Now, today what we'll be discussing about is the tech market, the tech stocks, what have been happening with them. And for the past couple of months, we've been seeing a lot of downtrending, a lot of sad returns, which, as you can see on your screen, from each sector of the S&P, tech stocks and communication services are down between 15 to 20% within 3 months. The question is, why so much fear and downtrending price? First, we need to establish two things. We need to establish a large cap stocks, which are over $100 billion, and then the small to mid cap, which are under $100 billion. Most of the small to mid caps are not as established as the FANG because they are in a growth period or haven't reached their maximum potential. So that's why they tend to be more volatile. This market has shown that from most small to mid caps being down very, very much. One well-established company I would like to show to you guys is NEO. So for example, here, which obviously wasn't its real high. I think its real high was around 50, real high was around 64 USD, but on this Google map you can see, wait, what's happening? It's 61.95. Because I had a lot of people that I knew investing in that stock. It went up to 64, I believe, and now it's down 76%, 76, 90%, so it's 77% actually. It's down. For example, and now I would like to show a FANG stock, which also is down very a lot of money, and which obviously this is not the real top, but whatever. It's down 47%. So we can see the difference between both stocks. So for Facebook to come back to its original price, it will have to go up 200%. It will have to double. Okay, but for NEO, it will have to be a 300% growth from its current price to reach its old previous high. As you can see, it's not easy. So you can see the difference between both categories that I've mentioned. Small caps are down way higher than large caps or the big five. So what has led to this fear? What has led to this downtrending market is the fact that investors are fearful. Why are they fearful? They're fearful because of the inflation data that has been coming out and that might come out later. Also, the Federal Reserve increasing the interest rate. So any sort of small bad news may cause a big withdrawal of liquidity because people are going to be scared. They're just going to take out their money and going to be like, okay, I'll wait. I'm not sure what's going to happen. This world might explode. People are going to always put in their head the worst case scenario, especially hedge fund managers. I don't know why they tend to do that, but that's why you see all this volatility in the market, is because people get scared very fast. They get bullish very fast at the same time. So it's a contrast between both events, and that has led to this kind of market. Now, I would like to give out some data about the big five. The big five are actually up 15% as a whole, their earnings and everything. In general, they're up 15% as a whole, which is better than the S&P, better than the Dow, and better than the economy. But still, these stocks have been punished. Why have they been punished? It's because of that fear that I've mentioned before. This chart represents it a very wealthy phenomenon. I have been mentioning people get greedy. They don't buy near the top. Most smart investors tend to buy here. They just keep on buying on this whole slope, and then they don't sell here. They still buy here, but most of the regular folks, retail investors, tend to sell here, which is unfortunate. And then they call the stock market a scam, unfortunately. But let's get to the financial data I was talking about. Microsoft. What is Microsoft? The stock that has held the best in this downtrending market, only down 22% in the last 6 months, which is not bad when you see when you see Facebook down 46%, NEO down 76%, only 22% seems very reasonable, especially when this stock does have a dividend. So you're not actually losing 22%, you've lost maybe 20% in this time period. They have shown a very good earnings. If you saw their earnings, you would have been happy. It's better than what analysts expected. Revenue growth amazing. As you can see, it's just here. Everything is green. I've never seen greens in this market right now. All that I've been seeing is red, red, red here, and they've shown some green numbers, up 18% revenue. That's incredible. At that market cap, they're still growing their revenue at 18%. This is phenomenal, and it's unbelievable. That means there's no real recession fear as the market is predicting, because these big companies are getting this huge amount of money, cash inflow. So the recession fears aren't as predominant. Looking at that, when you look at that, you're less fearful, but it's the fear is still there, and people are gonna still cash their money out. But what the point I'm trying to make here is that even after such great earnings, the stock did fall down 22%, not to say least. But that's not after earnings. I believe the earning run was this, if I'm correct, and then the stock went down a bit, like around 15 to 12%. So they've held pretty well. Now, when you look at Amazon, on the other hand, they are down 36%, and you can see the earnings in front of you. The earnings weren't as bad. They demonstrated revenue growth. They were on par with what analysts expected, but what happened with them was their earning call afterwards. So they were mentioning words like supply chain shortages, overemployed, overbuilt, and that led to investors not believing in the management and cashing out, which has led to this downtrend. 36% in 6 months, not bad, but it's still unfortunate to see this kind of activity even after a revenue growth, which you can see here. It's 7.3% revenue growth. Net income fell due to them saying, okay, we overbuilt, we overemployed, and we have unfortunately done some bad stuff. But that has led to, like, all the fear combining with this kind of result led to Amazon losing a lot of value in their market cap. And when Amazon loses like 10 to 20%, it's not 10 to 20 million, it's around $500 million leaving the company. To make my point is, while the small to mid cap demonstrated increased losses, like maybe Beyond Meat, this is Beyond Meat earnings report, like the newest one. The one in my last video wasn't this one, it was the one before that, and now they came out with new revenue, new quarterly financials, which were worse than the one I showed in my video. But while small to mid caps are decreasing losses, losing more money, and in PayPal's case, which is a mid cap, which is at $91 billion market cap, they had revenue increase, but their income has been decreasing. While they have been decreasing their income, big cap has been increasing the revenue, increasing their net income, in most cases increasing the profit margin. So this should be clear that big tech will rebound as soon as next quarter. It should rebound in next quarter if they keep their good performance up and no real macroeconomic event comes in and disrupts that growth or disrupt the market sentiment from bearish to more bearish. I could tell you that they will rebound within the next quarter. But the future is really uncertain for these small caps, these small to mid caps especially, because if they really need to grow and the economic activity is not going to shift, inflation is, even if price tend to stabilize, it's still at that price. You feel me? So it's not going to be an issue. It's not going to be an issue for people to buy these large cap products because they're already buying. But if they cut down on these products and their pay is the same as what it was before, you can see that they will be needing more growth. And how would they do that if people, like, their paycheck is the same and they're spending it on something, and even if prices tend to stabilize, their pays aren't growing. So once their budget is done, will they be able to buy these small short cap products, which tend to be in spaces that are more luxurious? Let's say maybe Beyond Meat. If you can buy regular meat, or if you cannot afford this vegan meat, you'll probably end up buying regular meat. This is it for this video. I'll recommend nothing. It's up to you guys. This is what my perspective on tech stock at this current moment.